Hey guys, thank you for tuning in to Stock Market Watch for June 18th, 2012. In front of you, you're looking at the S&P 500 as it is displayed as by the spiders, symbol SPY. Basically, it's an index. It's just going to trade like a regular stock, basically. Symbol is going to be SPY. It's going to give you an overall breadth of the marketplace, what the overall stock market is doing, which is important because 3 out of 4 stocks. I always say this, but kind of like drill it in because it was drilled into me, and it makes a lot of sense. 3 out of 4 stocks, 75% of stocks are going to move in the general directions of the overall markets, and that's why it's so important to look at these averages: the S&P 500, the Nasdaq, or the Dow. I like looking at this S&P 500 in the spies, the spiders, symbol SPY, because it's the most comprehensive one. I mean, in industry, size of industry, the diverse industries, technology. You got a little bit of everything in there. So let's go ahead and dive right in. It looks like right now the spiders are. You're looking at a daily chart right now, and zoomed in a little bit over here. Each bar that you see here, each bar is a day. Okay, that's a day's range. Here's the top of the day, the bottom of the day. Okay, so basically that's the range of the day. That was back in June 11th. Here's today's day, okay, June 18th. And the lines that I've drawn here, actually the system, the charting software that you use draws them for you. These are basically averages. They're important because what we're doing here is technical analysis, and a lot of technical analysts will look at averages and where is the price. So this being priced, right, where is it within the averages? So right now it's basically being squeezed. The price is being squeezed by the 200-day moving average, this 200-day moving average line right here, the purple one, the 20-day, which is this one right here, the green one, and then the 50-day, okay? So just taking a look at this, nothing is foolproof, of course, but when you're looking at this, you're saying, you know what? This market is consolidating. It's really just moving sideways right now. Really tough. If you're a stock investor, if you want to make a quick buck, you better find a real good stock because it's going to be really, really tough. Why? Again, because the markets are going to move and stocks are going to move in the general direction of the market. So if the markets are not really moving one way or another, really undecisive like this, these are very, very small percentage gains, by the way, up and down. With that in mind, it's going to be real tough. You're going to have to be real fast to make money because you can stay in a position for a while. I mean, if you got in a position back here, you're down right now. If you got a position right here back in May, in the beginning of May, and you haven't sold it yet, you're down right now. So, I mean, if it's a quick thing that you want, just a quick move out of a stock, then you got to look at the market and see what the market's doing. Now, if you're a long-term investor, now we're looking. This is basically broaden the scope as far as time goes. Okay, here's the beginning of the year. Okay, and we had a real nice uptrend. Okay, right at the beginning of the year, and then April we hit a wall. Okay, and we started moving sideways, kind of like over here, and then we actually broke down below the averages. And this is a perfect example. Here's that area right here. A perfect example of why when you break down, it is so important, because now you saw the volume come in. As volume intensifies, that means that there's more selling going on. The market basically gave up a lot of ground. So again, as I move out, you can see that the market is really, it's just, the gains are dismal. I mean, so, if you're looking for the big whopping 15-20% in a short term or intermediate term hold, okay, quick money, it's just been really, really tough to get that right now. Even with good stocks, it's been really, really tough. So, going back to the spiders here, zooming back in here, what I'm looking for this to do now is probably to start trading sideways here, consolidate some, and hopefully move up higher, okay? Nothing really exciting has ever happened, at least for me, when the price of the averages remain below. I'm sorry, the price of the stock or index, in this case an index, the S&P 500 in the spiders, as long as that price stays below averages, nothing really exciting happens. I mean, you can see it's just blah. It's just a blah, So we got to see, how this is going to behave now. Is it going to close? I'm looking for a close above this 50. But even if we close above this 50, the market is, this catapult here, the market is very, very news driven right now. I mean, every little news that comes out of Spain or Greece, anywhere in the Eurozone, I mean, it really moves markets. So I'm really looking at the markets now and saying, okay, at what point do we get above this average, okay, of the 50-day? Before, in recent past year, has been very, very a defining moment for price, as far as, are we going to trade below it and basically trade sideways or downward? You can see that here. Once we traded below it, we just really gave up a lot of percentage points. Now we're starting to get back up and hopefully above it. And when I say above it, I mean an actual close. At 4 o'clock when the bell rings, that the price is actually closing, because it can take a peak over and then come down and like it did right here. Zooming in on May 4th. Yeah, it traded over. You can see the high of that day was over the red line. However, when it finally closed, it closed right down here at the bottom of the red box, okay, of the candle. Then it just gave it all back. So that's what's important. So that's basically what I'm looking forward to right now, is seeing how this market is going to react. Okay, how this price is going to react within these averages. I wouldn't say the market is behaving all that bad right now. Okay, it's trying to finally base out here. It bounced off the 200-day moving average here. That's a good thing. I think nothing really good happens if we close below this low that the market put in on June 1st. Right on this candle right here, that's June 1st. June 4th. If we close below that, definitely below the 200, but really this is the lowest low, most recent low. So as I back out again, I mean, any close below this, I think we revisit the lows of back here on December 19th of last year, and then further back November 25th. As I back out, you have to go back after that low. I moved over to a weekly chart. As I back out, okay, here's those pivotal levels that I just drew as far as support. I mean, again, if we get down below that October low, okay, October 3rd, I mean, then we're looking at lows back from June 28th of 09, okay, so, and then so on. I mean, this is the ultimate low right here, okay, back in 08. So, I mean, that's a long ways away. I don't think we'll see that, but you never know. I mean, it just all depends on what the market wants to do. Right now, as you look at this long term, weekly, it looks like a nice uptrend, So, again, for the long-term investor, I mean, really, you're not getting hurt much here. I mean, it's just, it's probably another opportunity to buy here. However, I mean, if you get below these levels here, you can start seeing, the market really roll over, and then we're talking like larger percentage losses. So it's really, really has to stay above this 200-day moving average and this most recent low. So we'll just watch it and see what happens going forward. Again, this is Marvin from Stock Market Plan with your Stock Market Watch for June 18th. Make sure you check us out on Twitter and on Facebook. As we always on the website, we also give a lot of stockmarketplan.com. We give a lot of announcements and stuff like that, pivotal news, things of that nature, on and off. Go on there and subscribe. It's a free feed, and you get any type of news. We had some news on the Facebook, as Facebook was gearing up for their IPO and all of that. And as you can see, I mean, it's been, I tweeted a few messages about that, and it's just a lot developing there on the regulation side of the business. I mean, there's a lot of stuff they did wrong, so which can happen, and in the big world of banks, and it's just about bringing anything public, and money takes over and people make really silly mistakes. Again, this is Marvin from Stock Market Plan. Make sure you check us out, okay? Subscribe to the feed on Facebook, Twitter, or on the website, okay, guys? I appreciate you watching. Have a good one. Bye-bye.